Hello and welcome to the newsroom. When we look at the markets, 50, 55 points higher for the Nifty, looking in flat with a positive bias, and there you go, 52 points higher as far as Nifty goes. Pharma is really the buzzword in terms of sector today. We'll chat more about that. Going into the show, we also have a few guests lined up regarding the pharma pack. What's the best kind of investment that one should look at in terms of the pharma pack? But now let's welcome in a very, very special guest. This is from Nuvama. We have Ashish now joining us, MD and CEO at Nuvama Group. Sir, thank you so much for taking out time for us. Given the recent changes in regulation for debt funds, how should one look at allocation towards debt on largely in managing their own portfolio?
Actually, debt funds, SEBI has not done too much. It's the budget which has made it taxable. And I think that was one instrument that was giving a very, very tax efficient avenue for all retail and corporate investors to allocate to debt. That is now gone away. I don't think that will alter asset allocation as such because people will still have to allocate between equity, debt, and alternatives basis their risk profile. But what it will change is the choice of instruments. I think direct bonds and maybe credit AIFs and similar type of products, absolute return AIFs, these will come into existence. For retail investors, I think direct bonds will become popular, and for the wealthier ones, I think credit AIFs and long short funds and absolute funds will become more important as debt mutual funds have now become taxable.
Well, if we look at the recent RBI policy as well, the rates were kept unchanged versus an expectation of a marginal hike. Does this mean incremental flows towards debt can reduce?
No, I think actually it may increase because at least for the short period of time. Firstly, I think RBI was clear that they are not withdrawing their stance. They are actually still in the mode of withdrawing the accommodation, and they will wait to see whether there is a durable impact on inflation. Why they paused this time largely was because of two things. What they said, one was, of course, the global volatility, and second, they wanted to see whether the transmission of the past hikes have happened. But in our view, I think it may not see further hikes from here because I think globally the world is moving into a deflationary phase, and there is a significant correction in the WPI, so which will impact the top line of corporates, and they are in a sense seeing an implicit hike. So having said that, if maybe in a over a period one may see a little more upturn of the rates and then going down, then the general trend would be that the rates have peaked out. And if that is the case, people will want to lock in more in order to benefit from the high rates which are prevailing now. And people who want to benefit from short-term volatility will also take duration calls. So, I mean, intuitively, the flow should increase in this phase and not go down.
So, over the next 1 year, what are the events that can impact economic growth in India?
I think we'll have to watch out on how globally the central banks are pivoting towards the rate hikes, how inflation is playing out, whether any new kind of geopolitical risk pans out, what happens to China because China is opening up after a long period of time, and maybe the elections. I think these are the 4 5 key events which will happen. But having said that, I mean, one has seen over the last many years, these things keep happening at any point in time in any economy in the world. There are macro events which keep happening. But I think India is in a very good structural place. I don't think many countries in the world enjoy the multiple factors which are acting as tailwinds which India has. So I'm not particularly worried about these events. I think we have a very positive outlook towards India as such.
What is the overall view for equity 2023? Any specific stocks and sectors that are looking attractive?
So, see, sectorally, I think on the equity side, maybe better to speak to our head of research. Overall, I feel, I mean, banks continue to do well. If there is a rate reduction which happens, let's say not immediately, but over the next 12 months, rate sensitives should do well. We are seeing decent numbers coming out from the real estate sector. Banking results and financial services results are continuing to be good. Some of the areas in financial services like insurance and AMCs, one will have to wait and watch because of the multitude of changes which have happened. I think pharma looks okay, and IT looks under a bit of stress on an overall basis, and maybe consumer durables and the associated industries. One will have to wait and watch how it plays out during the summers.
When it comes to wealth management, what is the opportunity that you would see in India, and how would the brand leverage it for gaining share?
See, I continue to maintain that within the space of financial services, wealth management is the most nascent opportunity. It's actually the youngest business that is in existence now, and globally, if you see in markets which are far more developed, this is one of the largest sectors because the economy, when it moves from developing to developed, the affluence levels of people increase substantially, and the way the financial services business transforms, I mean, from credit to, let's say, savings to investments, the movement of capital is substantial. I mean, globally, half the wealth is held by individuals. That is not the case in India right now, and it is moving in that direction. So individuals become the savers of capital, and businesses and governments need those capital, and wealth management plays the role of that intermediation along with banks and other manufacturers. Except banking, if you see any other financial service product which finally reaches the hands of consumers, has to go through an intermediary, and collectively this intermediary actually is called the wealth management industry. Now in India, a large part of it is unorganized, and with the growing regulation, increased requirement of technology, product sophistication, lot of consolidation and movement from unorganized to organized will happen over the next 10 years. And that is the big opportunity which we are able to see. What we have done in order to leverage is that we have not restricted ourselves only to the top tier of the pyramid. We operate in the middle and the top tier, which is the bulk of the wealth management market in the country, because we feel that's where the real opportunity lies. And second, what we have done is we've created a very vast product suite. So we are not restricted to only one line of business, which is distribution, which most of the other wealth managers do. So I think combination of these two basically makes us well poised to tap into this opportunity.
With the rebranding exercise done for the company, what does it mean for the business?
So the ethos of the company will not change. We always kept the interest of clients above everything else. And if you look at the history of the last 10, 12 years, that is reflected. I mean, we've never had mis-selling complaints, or even in products like insurance where people struggle to have persistency ratios. Ours is significantly higher than the industry. So what will remain with us is our philosophy, values. What changes is basically, a fresh way of looking at wealth. We basically now are an independently, will become an independently listed, a board governed company. I think the governance standards will have to improve significantly for us to become an independently public listed company, and that will have its own implications on how we organize ourselves internally. And earlier we were part of the Edelweiss Group, so a lot of these things were being taken care by the Edelweiss Group Center. Most of those things will be managed by us internally. On the client side, I think significant amount of investments in technology will happen in line with whatever is happening in the market, and also in terms of investment in people, expanding our geographical reach, because you are aware, tier 2 and tier 3 are no longer tier 2 and tier 3. They've become mainstream as we speak in the Indian economy. I think the blurring between tier 1, 2 and 3 is happening very fast. So on the whole, I think continue with the client first philosophy, invest in technology, expand both our people and geographical reach is how we see the future.
Lastly, as the demerger in work, if you could share some details on the timeline.
Yeah. So that was actually the original construct of the transaction when the private equity PAG came in. And first stage of the demerger was when we had to bring all the companies within Nuvama. That happened last year. And the second and the final demerger is in the works. I think we expect the NCLT approval to happen in the month of April. And then procedurally, we'll have to file an information memorandum after our results of this year is out and board meeting and everything is done. We will file the information memorandum, and I think that will lead to the process of listing. So the conclusion of demerger, in our view, should happen anywhere by middle or third week of May, and we will listing in another 40-50 days after that.
Thanks so much, Ashish, for taking out time for us. All the best for the future. And thank you so much for sharing your thoughts.